This is Devlyn Steele for Augusta Precious Metals, back with a review of this week's most notable economic news. Before we begin, remember to like this video and subscribe for more economic updates. Leading things off, central bankers left interest rates unchanged this week, referring to the possibility of a return to accommodative monetary policy. Powell said on Wednesday, "Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that." In response to Powell's remarks, financial markets, which had been expecting rate cuts to begin in a relatively short order, fell across the board. In other news, we were treated to several updates on the health of the labor market this week. On Friday, the Labor Department's non-farm payrolls report said 353,000 jobs were added in January. That is until another correction comes similar to the 10 of 11 months that were corrected downward last year. The official unemployment rate, which had been expected to tick up to 3.8%, held fast at 3.7%. Earlier in the week, the Labor Department also surprised analysts by reporting that job openings in December climbed to their highest level in 3 months. According to the Job Openings and Labor Turnover Survey known as the JOLTS report, the number of openings ticked slightly above 9 million in December, an increase of the upwardly revised 8.9 million available jobs in November. On the other hand, another piece of the jobs data out this week sent a strong signal of potential labor market weakness, although we have heard that before. According to the payroll processor ADP's National Employment Report, the economy added 107,000 private sector jobs in January. That's well below both the downwardly revised 158,000 added in December and the 145,000 projected by economists. Also this week, the Institute for Supply Management checked in with some slightly better than expected news in the form of its Manufacturing Purchasing Managers Index for January. Heading into the week, the gauge was expected to land at 47.3, but instead moved up from a downwardly revised 47.1 in December to 49.1 last month. Still, this makes the 15th consecutive month the index has found itself in contraction territory. Finally, the Conference Board revealed this week that its Consumer Confidence Index for January increased to 114.8 from a downwardly revised 108 in December. The January figure represents the third consecutive monthly increase for the index and the highest reading in more than 2 years. Notably, the Expectations Index, a component measure of the broader metric, climbed to its highest level since last July, suggesting consumers are growing a little more upbeat about the economy's future prospects. That's all for now. We'll be back again next week. This is Devlyn Steele for Augusta Precious Metals, signing out.